Hello again, everyone. It's Hunt Rose with Lending Edge Mortgage, where America goes for their residential home loans. You can go to my website as well to get more information or to pre-qualify at fundingyourhome.com. As always, I tell all of my clients and prospects that you can always text me, call me, or email me for more information. Today I want to talk about the 5 things that all lenders look for when they're trying to pre-qualify somebody. I think the industry makes it a little more complicated than this, but it's only these 5 things. So focus on these 5 things when you're getting ready to do an application. Those 5 things are credit, debt, income, job stability, and assets. It's only those 5 things, or some derivation of those 5 things. First off is credit. What we're looking for, obviously, is your credit score. I could get into a little more depth, and maybe I will in another video. It has to do with depth of credit, but really what we're trying to understand is what is your credit score. It's indicative of your past history. It gives us some idea of your past history. So we want to know what your credit is. The second thing is, what is your debt? What we're looking for is, what is your minimum monthly obligation? What do you pay out every month? What is your required payout every month? Not what you pay or what your debt is, but if you make a $25 a month payment, or your invoice that comes to your house says pay $25, that's what we want to know, okay? So just your minimum monthly obligation every month on all of your debt obligations, whether it be credit cards, student loans, alimony, child support, car payments, those types of things, okay? The third thing is income. What is your income? We either want to know what your salary is, if you're a salaried individual, or we want to know what your hourly rate is, what's your hourly wage. And what we use is your gross. We don't do it after taxes. What we want to know is, what is your gross. So if you get paid $50,000 a year, we take that divided by 12, and we use that as your monthly gross salaried income without tax deduction. If it's hourly, let's say you get paid 20 bucks an hour, we do 20 times 40 hours a week, and then 52 weeks out of the year divided by 12. We use that number as your gross monthly income, okay? And then there's job stability. What we're looking for with job stability, number 4 of the 5 items, is job stability. What we want to know is, do you have a 2-year work history? And it doesn't have to be a contiguous 2-year work history. We just want to know that you've had 2 years history, full-time employment. Okay, so that's job stability, okay? Then the last one is assets. What we're trying to understand here is, how are you going to pay for your closing costs if you were to buy a house? And obviously the first thing is checking savings. It can be mutual funds, annuities, standard brokerage accounts with stocks, bonds in it, but primarily, where is the money that you're going to use to pay your closing costs, okay? So again, this is just a brief video, but I wanted to give you some insight as to what you really need to focus on, because there are so many things out there, and it's really only these 5 things: credit, debt, income, job stability, and assets. If you have any questions, as always, don't hesitate to call me, text me, email me. And again, my name is Hunt Rose with Lending Edge Mortgage, where America goes for their residential home loans. Please go to my website for additional information, or my contact information at fundingyourhome.com. You can get started there and do an application, and I'll look at it right away. Thanks for watching, everybody.